In the second problem, we will calculate contribution margin ratio. See the problem. Last month, One Harrison Creation and Corporation sold 40,000 units. Total sales were 3 lakh. Total variable expense were 2 lakh 40. Total fixed expense were 45,000. Okay. What is the company contribution margin ratio? We need to first calculate the contribution if we want to calculate the CMR. So how we can calculate CMR? Sales less variable expense, right? Sales is 3 lakh, variable expense is 2 lakh 40,000, and my CM is sale minus variable. So my contribution margin is contribution margin is 60,000, right? First we calculate CM, right? Okay. Now in CMR we can write CMR equal to contribution divided by sale, right? CMR, what is my contribution margin? That is 60,000. And what is my sale here? 3 lakh, right? So what is the value I will get? So we can calculate here 60,000 divided by sale. My value is 0.2. 0.2 mean 20 multiplied by 100. So it is 20%. So my CMR is 20%, right? We have calculated first CMR. In the second requirement, estimate the change in company net operating income if it were to increase its total sale by 1500. The previous sale were 3 lakh. If company increased sale by 1500, so what is the estimated change in the net operating income? So how we can calculate it? Change in total sale, the very simple formula. First you need to change the sale. Change in total sale is $1,500, right? $1,500. The CM ratio is 20%, right? So multiply this 1,500 with 20%. So what we will get? We will get 300. So estimated change in net operating income is 300, right? So we can do it with the previous method, contribution income statement, right? We prepare contribution income statement in which we will write sale 3 lakh 1,500, right? And the units were increased, right? Each and everything already we have done in the previous statements format. So you can make it in the statement format as well. So here the change in total operating income is 300. This is the shortcut of the question, right? You can check change easily.